What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock. And guys, I'm sure you're aware, growth stocks got smacked in the mouth today. Dozens and dozens of companies got hammered. We're talking Skills 5%, Palantir 6%, ChargePoint 5%, Neo 5%, Roku 5%. That is some serious dips, especially for companies that have no bad news coming out. So we know that a lot of the volatility today was because of the jobs report coming out tomorrow. A lot of people don't even, really keep up to date. It's just a psychology thing when these jobs report comes out. There's a lot of volatility and a lot of people selling and taking profits because they're scared of, horrific news coming out. So that's the reason for the big drop today. But we're going to take a look at SoFi, a 4.8% discount sell off today. Can this stock go lower? We're going to take a look and make sure we're getting a great buy. And only if you feel this video gives you a better insight on the SoFi stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all the growth stocks and spec plays. There's going to be a lot of great information, so let's get into it. All right, guys, so we need to stop living in fantasy land and we got to accept reality, okay? The reality is growth stocks sold off because of inflation fears for 3 to 4 months, okay? Those fears are gradually slowing down. Supply chain issues, chip shortages, everything's coming back very slowly. But it just looks like we're in a market right now with a lot of penny flippers, day traders, a lot of shorts. It's just a lot of volatility, and it does not look like a lot of people want to go long on these growth stocks yet. The safest thing we can do in this environment is listen to the experts on Wall Street. You don't want to go against the Wall Street analysts and go against their price targets. The reason why is you're never going to lose the shorts. They are going to be after your stock for months. Your stock may run, they're never going to let it go, and they're going to bring it all the way back down, to that low price point if it's a stock that is not performing well. So you want to listen to these analysts. The good news is that the SoFi stock is gaining traction very, very early in the SPAC stock stage. A lot of SPAC stocks don't even get price targets at, such an early time frame after the merger. We have two analysts right now with a high buy rating of 30 bucks, potential upside of 50%. What does that tell you? That tells you that it's a great time to be buying right now, but there is downside risk, okay? This stock may drop lower, okay? I can see this stock potentially dropping to maybe 15, 16, 17 again, especially, with all of this volatility happening in such an early time frame after this merger. So definitely 15, 16, 17 is possible. You have to be aware of that. I have an average in the 17 and a half range. So if the stock does drop, I will most likely average down if it does drop to like a 15. But the thing is, you don't want to really put a stop loss on your stock. The reason why is your stock might sell, you might wait for it to drop lower, and then it may rip 10, 15%, and then you just lost out on your position. So if you have a decent average price, the best thing to do is just average down. You don't want to set up a stop loss because you might lose out on that position that you have right now. It might be better than what it could be if you tried to wait for a further dip. So that's just something to think about. The market cap right now is very reasonable. The revenue projection this year is $1 billion, okay? That means right now they're trading at a 15x multiple on this sell-off. Some of these other IPOs and growth stocks, have gotten into that 40 to 80x multiple on just revenue. So this one with its high growth of over 100%, it definitely has a little bit of room to run. Quoted by those analysts, I would definitely put this at a price target of, 30 bucks right now. And the best potential upside that we can see in this company, I think by the end of the year is $50, okay? So you can come close to, tripling your money if this does drop to 17. I think that's what, about 51 on a 3x. So the stock price would be about 51 bucks on a 3x, and I think it can move to 50 if they smoke the next two earnings along with the bank charter approval. Okay, that's the only way this stock is going to get to 50. Okay, you got to be reasonable. You can't say, This is $100 stock, $200 stock right now. 50 bucks potentially, you might get a 3x this year, and that's very fast. Do this type of performance in a 1 year span, it's definitely worth the volatility right now. Like I said, if you have, the strength in the diamond hands to hold through this crazy, crazy roller coaster with these great growth stocks, Roku, Neo, ChargePoint, Palantir, Skills, these all have high growth potential and a high chance of profitability in the short term. So the thing is, you just got to get by this short term sell off. So don't be afraid, embrace it, and just know that downside risk looks to be about $15, $16, $17 right now. The best way to summarize what SoFi does is they have dozens of financial products that include student loans, refinancing, mortgages, personal loans, credit cards, investing in stocks, banking, all through their mobile app and desktop interfaces. So, what their main headline is a one stop shop for your finances to get your money right, okay? So this is, competing with the legacy banks, and they could be some of the ones shorting this stock right now. I think the short interest is near 20%. So it's a battle right now for this stock to move, even with these price target upgrades. Once again, follow the professional analysts. Do not go against professional analysts and risk like, an AMC where the downside is like 60% when it's already 3-4x over. An article came on Investor Place. Let's be real, Investor Place is not the best for articles. There's a lot of rookies and amateurs on here putting out garbage all the time on penny stocks. But I can't really tell if this guy is a bull or a bear. I can't tell if he's trying to help people out. I can't tell if he's shorting it right now and want to go long. I just can't tell. But he said, wait for a pullback to buy SoFi Technologies. All right, douchebag, it pulled back 35%. So can you comprehend how much of a pullback you're talking about? So this sounds like a bear article right now that I'm looking at, but I did read through it, and he does give some great insights, and we're going to review this. Long-term investors should consider buying SoFi stock after the potential decline. Guys, this was at like 25 bucks, so this is like a 30% plus pullback right now at the $18 range. I mean, this is crazy. If you look at the 1 month, I mean, look at this. This stock was at $24, $25. Insane. The price action. When it comes to SoFi stock, maybe it is best for us to start with the name's recent price action. On June 1st, SoFi closed the day near $23. The next day saw a high of near $25. Since then, it had been a choppy ride, and shares have traded at a range between about 20 and 25. Today, the shares dipped down to just below 19. Still, year to date, the SoFi stock is up 51% with a market capitalization of $14.7 billion. Well, yeah, but you got to think, nobody even knew what this stock was till it hit $13, $14 because it was a SPAC with no target on it. Nobody even knew what the company was. So if you got in on this stock at $10 to $13, you pretty much just took a gamble on Chamath. So pretty much the lowest price target you could have got at this company, knowing what the heck it was about $13, $14. So if you got into that price range, you're in some very good safety net right now. But once again, this could pull back to 15, 16. We just saw it hit 17 like a day or two ago. So we made it back up to 19. Now we're hovering in that $18 range again. So just understand the volatility that comes with these high growth stocks and the potential to 2, 3, 4x your money in the short term. True long-term investors would like to see the stock back at its record high of 28.26, which hit it in February while it was still trading under the IPOE ticker. However, given the recent increase in price, short-term profit taking could be in the cards before a new leg can start. Okay, I get that, man, but it looks like, people took a lot of profits off the table. I think, we're getting close to the bottom. He's not really giving you a price target. He's just trying to cover his butt, saying, don't take my advice, it could go lower. So he's not really giving people any guidance of, what kind of price we should be hopping in at. And I'm trying my best to explain, what this stock could hit in the short term. The company released its first quarter financial results in late May, which I've done a couple of videos on. If you scroll down to my other YouTube videos, I covered the earnings report, which were stellar. Days before the completion of the SPAC merger, adjusted net revenue was $216 million, a 151% year-over-year increase over Q1 2020. The company also announced positive EBITDA for the quarter, as well as $70 million improvement year-over-year. Now SoFi expects to continue its growth in regards to members, having managed 110% year-over-year growth in Q1 For full year 2021, the group expects net revenue of 980 million, up 58% from the realized 620 million in 2020. So guys, very exciting times. And then they go into the bank charter approval. Plus, this March, SoFi agreed to acquire a California community bank called Golden Pacific Bancorp in order to bolster its goal of nabbing national bank charter. This would support profitability as borrowing costs would be lower. So this is going to improve their EBITDA significantly. If you look at their investor presentation, which I probably looked at 20 times, it's just getting annoying with all this volatility from the shorts, the pipe sell-off, guys. We're going to get through this, and I'm telling you, by the end of the year, during Super Bowl, once their name gets out more, this could potentially be a $50 stock at best, around New Year's. That is definitely going to take some time, so you have to be careful, especially entering options at this time. Entering a $20 one-year option is very smart to do right now. But if you're doing like weekly calls, monthly calls, it's a good chance, you're going to get burned if the market goes stagnant. Like we just seen with NEO today. If there was new investors entering the NEO stock on weekly calls expiring in the next 48 hours, they all got burned. Okay, that's what comes with day trading. You get burned when you play the weeklies. And I did say in my last video for the NEO stock, guys, if you watch this video, I explained, yes, the deliveries were excellent, but we could see this pull back to 50 bucks, and that's exactly what happened today on the NEO stock. We're just going off track for 1 second. The NEO stock pulled back to about 50%. So it looks like people sold the news, but it does not matter because those deliveries were on point, and that stock will go higher. So there's downside risk on great news. That's just the market we're in right now because of all of the day traders. And the thing is, this stock, I'm telling you, looks like it's getting very close to that bottom. So you need to be buying heavy right now in that 15 to 19 range. I know that's a large number, but these are good price points to be buying if you're investing in this company for the long term. Once again, tomorrow, the bad news while all these stocks are dropping is this jobs report nonsense, poised to boost, hinder Biden's agenda, yada, yada, yada. I don't really pay attention to this. Economists expect the U.S. to have added roughly 700,000 jobs in June compared to the previous month of 559. And then if it's, not on point, the number's off, they just make a bunch of headlines. Oh, the economy is growing too fast. There's not enough workers. The economy is slowing down. Guys, the media is going to change their topics every other week. 1 week it's value, 1 week it's growth, 1 week it's value, 1 week it's growth. It's very, very annoying in this market right now. Once again, don't go against the experts. Keep your buys in the range of the experts on any stock out there. Always look at tip ranks. They're going to give you mad coverage on, when these are getting covered by professional analysts on Wall Street. As this stock gains more traction, the analysts will jump up to like 5-10 analysts, where that gives the stock a more sturdy price movement and fair value. And only if you feel this video gave you a better insight on the SoFi stock, the crazy volatility that's happening right now, be sure to subscribe to the channel. I'll be keeping you updated daily with all the growth stocks and spec plays. A lot of good information coming out, and you don't want to miss it. And once again, I want to say thank you to all of my Patreon members for the support. We've been in the market dealing with this sell-off for a while with all this inflation craziness. It's been a wild ride, but we're going to be looking very good, once the end of the year comes around and we get a couple more earnings under our belt. So be sure to take a look at the link in bio and read up on the Patreon and see if it's a good fit for you. We have over 500 users inside of the Patreon, and there's a lot of good information in there. So I hope you have a great day, and thank you for watching this video.